Hi, this is Tara, and in today's video newsletter, what I wanted to do was ask the question, are you gambling, speculating, or are you investing? So let's take a minute to look at these three different options. Gambling should bring to mind movies from Vegas where someone is standing at the wheel going, oh, I can't lose. Gamblers tend to think that they're going to win no matter what, and statistically, that just doesn't really work out. You might win sometimes, you might lose sometimes, but gambling is just more throwing the darts or basing, uh, taking lucky guesses, and that's really what gambling is. Speculating, on the other hand, is still high risk, but what speculators tend to do is a little more research and put some thought into what they're doing. What people don't realize about speculating is there's a potential for high rewards, but coupled with that is the flip side of very high risk. And most people are very aggressive investors when the market's going great. But when the market goes down and you have a bear market, people aren't as aggressive as they usually think they are. And you've got to remember that a speculator accepts the not only the high reward, but the potential for the high risk. So the question you have to ask is, if you're making a speculative investment, can you handle or sustain or absorb the flip side, which is the downside? So just a food for thought to think about there. Some signs that you may be speculating or gambling um, are, for one, do you have an emotional response to your money? When the market's going up, do you get a little greedy and start buying things that you hear about on the news? And on the flip side, when the market's going down, do you feel afraid and kind of make your decisions like, oh, I need to sell or do something because the market's going down? Do you let the emotion drive the decision? That can be a sign that you're more gambling uh, and not making clear decisions. Another thing to ask yourself is, are you listening to office gossip? Every office has someone that likes to stand around the water fountain and talk about what the best investment out there is and how they're making all kinds of money. Doesn't mean you can't listen, but just think about it. By the time the news has gotten there, it's already been shown in the media, which brings the next question is, are you listening to what's on the news? Because by the time a stock tip or a trend is on the media or at your water fountain, is it new? Is it fresh? And if you act on it at that point, are you going to be leading the way, or are you going to be on the tail end and possibly getting involved in the buy high, sell low kind of a cycle? So you hear some good advice or different people talking that may trigger in your head something that you want to research, and then what needs to happen at that point is that you start doing some good due diligence and find out the facts for yourself. So here are some healthy ways that you can follow up your investing and know that you're making a better decision. So one, if you're working with any kind of an investor or broker, know very clearly, how do they get paid? Everyone gets paid to do this business. No one's doing it for free. You should know how they're getting paid, and they should just tell you. It shouldn't be something they're hiding, or it shouldn't be an under table kind of conversation. People should just let you know straight up, here's how I get paid, here's how I make my money. And then you can determine whether or not that fits with what you're comfortable with. The next thing you want to ask someone is, especially if you're using a money manager, how do they pick the stocks or bonds or funds they're in? Do they do, some companies spend a lot of time doing in-depth research on individual companies, where some money managers have a more quantitative or mathematical approach where they'll compare different funds to S&P 500 performance. It's all up to you which strategy you like, but just be very aware that there are different strategies and know the limitations and the advantages of each. And then the final thing is, if you're using some investment companies, you want to know their philosophy. There's all different kinds of philosophies out there. Some companies really stick to the buy and hold and are in there for the long term, and that's got its place. Some companies say that they're active money managers, and I can tell you right now there are many different kinds of active money management. So someone's going to have to peel back a little bit more and tell you what that means, active money management. That's a good way to go. And some companies focus on trying to get the best returns they can, where some companies will focus more on protecting from the downside. So again, there's a lot of different strategies out there. There's a lot of different philosophies. The bottom line is you should understand the philosophy of whoever you're working with, and they should be able to explain it to you clearly. And so that's the question, is, are you gambling, speculating, or investing? It has to do with how you make your decisions, how you get your information, and how comfortable you are with what's going on. If you feel like what you're doing is based on the best research and knowledge you have that's available, then you're probably doing pretty well. If you just kind of guessed at it and hope it works out, then you know you're probably gambling. So good luck to you. Thanks.